Let's check with how markets in the region closed trading yesterday, kicking off with the BRVM, or the BRVM 10 index closed trading at 230.93 points, up 0.5%. Now, meanwhile, the BRVM composite gained about 0.08%, closing at 207.73 points. Total value traded on the day climbed 1.39 billion CFA francs. The currency for the region is trading at 497.97 CFA francs against the US dollar, putting its year-to-date high at 0.24%. Now in Ghana, the GSE Composite Index closed at 1,907 points. That's a gain of 0.07%, taking its year-to-date advance to 58.95%. The GSA Financial Stock Index closed at 1,643.54 points, up 0.31%. The year-to-date change for that index now stands at 58%. And onto the currencies front, the Ghana CD is trading at 2.04 to the dollar, putting its year-to-date change at a negative of 6.94%. Let's go now to Nigerian markets. Risk appetite remained weak in midweek trade at the local bourse as the earnings season turned sour following the unexpected cash reserve requirement for banks' public sector deposits announced by the MPC on Tuesday, or the market share at 0.87%, closing around 37,554 points. Other losers on the bank, apart from the banking stocks, were Transnational Express, Royal Exchange, and Cement Company of Northern Nigeria, while some of the gainers were Forte Oil, MRS, Conol, and Champion Breweries. Now let's take a look at market sentiment yesterday. I'm not being joined by Linus Iwoju. He's the head of research and market intelligence at Diamond Bank. Good morning, Linus. Thank you so much for joining us.
Thank you.
Well, let's start with market reaction yesterday. Of course, so when that MPC announcement was made, markets hadn't opened for business, but now we saw a run, particularly on bank stocks. Just quickly, briefly, share your thoughts on how the market received it yesterday and those bank stocks that took a hit.
Yes, thank you. You know, if you look at the performance of the market yesterday, it's largely attributed, to CBN pronouncement following the ending of the MPC meeting on Tuesday. But significantly, the impact was felt more on the banking sector because, the development from the MPC meeting is expected to, impact more on the banking industry. But this is not the first time that we are seeing this kind of development, and we'll expect that the bank, in a couple of weeks and more, will be able to adjust their balance sheet, and face their development headlong. And majorly, most of the stocks that lost yesterday are the heavyweight counters like FBN Holdings, Access Bank, ETI, even Access Bank, and even Diamond Bank too, lost. But we see this as a temporary development because generally, if you look at the markets, we expect that the market that have grown about 35% year to date is bound to experience this kind of distortions, from time to time, depending on the development in the operating environment. But luckily, the oil and gas sector was able to reduce, the losses we saw yesterday in the market, especially just as you noted, gains by the MRS, Conol, and even Fort Oil almost gained a maximum of about 10%. But going forward, we expect that, with the development in the operating environment, banks will be able to adjust their balance sheets and find a way around, the CBN hiking of the public sector's CRR to 50% in the coming days.
Okay, Linus, let's talk about those stocks that made it into positive territory yesterday. You just mentioned Forte Oil, MRS, Conol. Now, at first, in the last couple of sessions, it started off with Forte Oil and MRS. Now, it looks like we have more oil stocks joining that list. Is this a bandwagon effect, or is there a specific reason why investors continue to show loyalty to these stocks despite all the uncertainties that still persist in that sector?
No, I don't think it's a bandwagon effect, really. But if you look at, the oil and gas subsector and even the, oil and gas sector as a whole, it's a sector that, the players there have continued to do well despite the challenges that we are seeing there. But I think a lot of people are beginning to take position in some of these, companies because in the coming days and months, we may likely see some sort of, increased stake in holdings in some of these companies, and there could be some element of, M&A happening, the coming days, especially some of these oil companies that are not doing too well. And, you know, with the possible passage of the PIP bill that is going to revolutionize that sector, people are beginning to take, you know, position. And if you also look at the banking sector, most of them seem to be, you know, hitting their limit. So the other stuff that's possibly doing well, you know, that sector, apart from the food and
okay,
beverages,
Linus,
the oil
let's
and
quickly
gas,
let's just take a step back from the markets now. Go into a recent announcement by the Minister of Finance a few days ago that a new mortgage refinancing company will be established by the federal government between August and September this year. Now, according to the finance minister, this time many more Nigerians will be able to afford house mortgages. What are your thoughts on that?
Yeah, for us, it's a fantastic idea, and it's you know, long overdue in an economy with 160 million people and a housing deficit of about 16 million. You know, this coming at a time when, you know, when it is needed most. You know, in Nigeria, if you look at most of the middle class, a lot of them could not afford, you know, mortgage, and where it is available, the rate is quite high. So government intervening at this junction in the development of the country is a welcome development. And also coming on the heat that, you know, it's going to get about $300 million support, you know, from the World Bank. We expect that when this kick off in 2014, a lot more Nigerians, especially from the middle class, will be able to, you know, access more mortgage at a reasonable, you know, pricing, and this will also help to reduce the housing deficit in the country and generally improve the economy as a whole, because one of the major issues that's affecting Nigeria as a country is the issue of, you know, huge housing deficit, which has to be addressed by the government. So it's a welcome development and it's a step in the right direction.
Well, is this enough for you to change your forecast, as it were, for the real estate sector? I mean, if we do see this seeing the light of day, and if we do see more middle-class Nigerians being able to afford their own homes?
No, of course, with this development, it's going to, you know, we're going to see a lot of vibrancy, you know, in the mortgage sector, and because it's going to also help to release more funding to the primary mortgage institutions, who will now be able to, you know, to lend more money, you know, to new, you know, middle class owners who are seeking to own their houses for the first time, and most importantly, at a very reduced interest rate, because that's one of the areas that have been putting off a lot of new house owners. So I see it as a good development that's going to, you know, help, you know, brighten, you know, the outlook of that sectors in the coming days.
Now, according to the Minister of Finance, Nigeria still has a housing deficit currently standing at 17 million units. How fast do you think we can close this gap with this new development?
Yeah, with this new development, I think in the next 5 to 10 years, we should be able to close it at least by half. Because, you know, once this kick off in 2014, what the refinancing is going to do is to, you know, buy off the existing mortgages from the primary mortgage and be able to give them a new fund. And with the way the middle class have been trending and developing, we expect that in the next 5 to 10 years, that gap will probably reduce by about half.